Hey everyone, welcome back to Corporate Decoder. Today, PPG Industries Incorporated just filed its annual report for the PPG Puerto Rico Employee Savings Plan, and I am seeing some interesting shifts in their investments. Quick note, this is not financial advice, just my take on public filings for educational purposes. The plan's assets have shrunk quite a bit, and it looks like they are moving money out of some of the safer, more established investments. Alright, let's dive into this filing for the PPG Puerto Rico Employee Savings Plan. This report gives us a snapshot of how the company's retirement plan for its Puerto Rican employees is doing. It is basically a look at the investments held for these workers' retirement funds. First up, we have the statements of net assets available for benefits. This is a big one showing us the total value of everything the plan owns and what it owes. For the 31st of December 2025, the total assets were about $8.1 million. Now compare that to the 31st of December 2024, when it was over $15 million. That is a massive drop, almost half. The biggest chunk of that change comes from investments. Back in 2024, they had over $14.5 million in investments. By the end of 2025, that number has fallen to just over $8 million. This means a lot of money has been taken out of the plan or moved elsewhere. Another number to note here is the notes receivable from participants. These are basically loans that employees have taken out from their own retirement accounts. In 2024, there were almost $500,000 worth of these loans. By 2025, that number has dropped significantly to only about $20,000. This suggests employees are paying back their loans or perhaps taking out fewer of them. Now let's look at the statement of changes in net assets available for benefits for 2025. This tells us what happened throughout the year to change that asset number. The plan added over $900,000 from investment income, which includes things like dividends and interest. They also received about $85,000 in contributions from employees and the company. But here is where we see a huge outflow. Withdrawals for the year totaled a massive $7.9 million. This is the primary reason why the total net assets available for the plan decreased so dramatically. When you have that many people taking money out, it is going to shrink the pot significantly. All of that activity resulted in a net decrease of about $7 million for the year. Starting the year with over $15 million and ending with just over $8 million really paints a picture of a significant cash out from the plan. The report also includes an opinion from PricewaterhouseCoopers LLP, their independent auditors. They basically say that the financial statements fairly represent the plan's financial health and that they conducted their audits according to professional standards. They've been auditing this plan since 2013, which gives them a good understanding of its history. Looking at the breakdown of investments, specifically under fair value measurements, we see that the plan held about $690,000 in cash equivalents for 2025. This includes things like money market funds and very short-term investments. The bulk of the plan's investments these days are in mutual funds, totaling about $6.4 million in 2025. This is down from over $11 million in 2024. There is also about $974,000 invested in PPG Industries, Inc. common stock. This has also seen a decrease from about $1.7 million in 2024. It seems like they are reducing their exposure to their own company stock. Let's look at the specific assets held at the end of 2025 as listed on the schedule of assets.